This example begins with a fairly deep retracement. Then we can base a Fibonacci time zone on the same range as the initial uptrend. Now that there's a move higher, the Fibonacci retracement can be expanded and be combined with a relatively smaller retracement to find overlapping ranges where there's often more potential for reversals to happen, specifically closer to the Fibonacci time zone lines. Spirals in this case are used for supplementary confirmation of this particular range where the uptrend continuation begins to significantly slow down. It will be based on this upswing point since that's where the retracement rebounded to begin the bullish continuation. Overall, these intersections with the spiral mark the beginning of this more bearish phase that's close to the actual reversal point and the intersection with the Fibonacci time zone and retracement levels. As the downtrend develops lower, attention naturally focuses towards the gap fill range, which also happens to have close overlap with levels from the larger and smaller Fibonacci retracements, so it's no surprise it continues to be an important reference area in the following weeks, especially in relation to the upcoming Fibonacci time zone lines, where key continuations and reversals take place.